Hello everyone. I'm just going to do a quick, late recap on a pound yen trade I took. I entered on the 3rd of March and I took profit on that next Monday, so I held over the weekend. So starting back out here on the 4-hour chart, we can see that large wedge over the past couple of months that had been forming, and we have since broken out and are currently just kind of consolidating underneath that breakout point. When we retested that bottom wedge part, I had a couple of trades in here, but we had made a double top at kind of the retest of that wedge here on the 4-hour chart. So I figured, since it had made a double top there and we had a little sell-off away from that point, we were kind of trickling its way back up for a potential third attempt. I figured that would more than likely fail, just by simple reading price action, because we have this wedge pattern that was broken out to the downside, so you would expect some kind of potential continuation move down from there. So the bears were obviously kind of overall in control anyway, because we've been making lower highs and lower lows throughout this time since breaking out. But so I figured that this was just another lower high in the sequence of the price action. So looking at my entry, let me bring him up here. This was my entry right here. I entered on a 1-hour chart, and the reason why, we have that double top there. So first thing I do is I kind of try and look for structure. We had a nice little level here that had kind of, if I extend that out, once it was broken here, it acted as a support or resistance rather, and then broken again, and then support, and then broken, resistance. So it's been kind of a little important level in the past, so several times here. So my entry was right here. I missed the first wick up. That would have been the optimal entry. That was right at the 78.6 fib retracement from that high point to the low. And I believe we had that little trend line. If we take this point here down, that was a perfect, that's your perfect entry right there. No drawdown entry. But I missed that first wick up, and I got in on, I don't remember which one. It was one of these candles where it kind of wicked back up, and might have been this one when it was retesting that little trend line there. Yeah, so price kind of moved down away, about 40-50 pips or so that Friday. And I decided to hold over the weekend. We opened up on Sunday evening and had a quick spike up before a continuation down with a few hours of consolidation before London pushed it down to my kind of my profit target area down here. Ideally, and had I held through the middle of last week, my overall profit target would have been hit down here at this negative 61.8, and that would have been about 150 pips. But you never know when you're going to get some kind of crazy move up like this with GJ, just randomly. That's a 124 pip move up in just a couple hours. 4 hours, that move was, all this price action was completely erased. So you never know when that's going to happen, and you know, it was struggling to get past down this negative 23.6. So I just went ahead and took profit. I ended up taking about, oh, let me see here, I think it was just shy of 94 pips. Yeah, 93.8, you know. So I held this Friday, and it says, well, yeah, so I opened on Friday, held Saturday, Sunday, and then TP'd on Monday. So that was a nice little trade. It you know, it could have been more, but it obviously could have been less had I, you know, held out for, you know, even a longer term target. You know, I'd be right back. You know, it came right back up to my entry and held again. That level held again, but so a little mismanagement down here. I could have probably just taken profit at this negative 23.6. You know, that would have been about 110 pips or so. I think the highest I saw was about 115 pips at one time. I don't know, on one of these spike downs, but yeah, right there. So yeah, so overall I was pretty happy with that trade. You know, 94 pips isn't anything to sneeze at, you know. So stop wise, just to kind of go through, I generally always open up with a 30 pip stop. It was essentially kind of at the highs here. I probably could have risked a little bit more and been a little bit safer and added another 10 pips to that and put it above the highs, but I felt that, you know, it would, with all this confluence right here, and after failing to go higher after 2 attempts, that it would more than likely hold. So just a 30 pip stop. I left my stop where it was. Well, actually, I moved it down just essentially to kind of break even before the close of before the market close on Friday. Excuse me. So it was just kind of in, you know, just kind of at break even. Had nearly got taken out for just kind of break even on Sunday when the market opened. We had kind of a quick move up, back up to the 61.8 fib, and then just kind of rolled over from there. So once we broke kind of these levels down here, I had moved my stop down kind of right around these levels here. So I had about 40 pips locked in at that time, and then once we tagged that negative 23.6 the first time and retraced back up and came back down the second time and retested it, and I still failed to take profit at that time, I moved it down just to around this, just above these, you know, this little area here and this spike high here, just in case it wanted to come up. And had I just kind of left it there, it would have obviously been fine and rolled over again to hit my initial target that I wanted to take profit at. But you know, you never, like I said before, you never know when you're going to randomly get some 150 pip candle on GJ. So it's better to just kind of, you know, who's going to sneeze at 94 pips, right? So there's always going to be other trades. GJ's probably becoming one of my favorite pairs to trade, just because it's so volatile, and if you can find really good points to enter on, you can make a lot of pips really fast. That goes the other way too, you know. Obviously, if you have a poor entry, which I do at times, you can take some drawdown pretty quick and get stopped out. But yeah, as long as you kind of manage your risk and get these nice 3-to-1 trades, then you only got to be right about 30% of the time. So if you have any questions about anything, let me know, and hope you enjoyed the recap.